Hello everyone, today is August 5th, 2025. Let's go over the trend lines and the indicator analysis for now so we can better understand the current situation. The weighted index has reached a new high again today. This new high appears to be quite strong and notable. This resistance area has seen a lot of consolidation for a long time, but today we see a solid bullish candlestick breaking above it, so it looks quite strong. Currently, the overall trend of the weighted index appears to be very stable. Even though it has been rising all the way, it seems like there's a gap here and it hasn't formed a second bottom. But the way it's moving, it's like climbing stairs. One step, then another and another, steadily moving upward. On the other hand, when the bears take over, you'll notice that there aren't any steps on the way down. It just drops sharply all at once. Now for this recent move, everyone originally expected it to be just a rebound. The market consensus was that it would be a rebound, but if you look at the way it's been moving, especially when it reached this final resistance zone, it became very clear. It also stalled there, but even with all this negative news over the past week or two, it still hasn't pulled back. So it's possible that this 22,700 index level, well, it might not pull back for now. Maybe at this point, because generally speaking, when it moves up to this high point, even before breaking through this high point, which is a significant level reached in the current trend, there are already certain indicators, such as signs of overbought conditions or weakening momentum, that suggest it needs to pull back. Might not necessarily require a pullback. You could say it's a kind of short-term exemption. Why? Because in this rebound zone, it's supposed to show strength. It's supposed to demonstrate. When it's showing a trend that leaves people empty-handed, it actually needs to display this kind of movement, a rally that doesn't look back. But if it continues to surge without looking back after reaching a new high, then it will eventually have to pull back. But does that mean it won't pull back at all? Let's look at the previous wave. In the trend of the previous wave, we can see that here, as we initially estimated, according to these indicators during the decline, it seemed like at this point it was also a spot that needed to be filled. Here, it broke through and then pulled back, and it seemed like there was a divergence here, probably at this high. This high should have been filled, but in the end it wasn't. It just kept going up like this. It just broke out directly, and without filling that gap, it kept rising all the way, right here. So why didn't it fill the gap at that time? Later on, all the indicators did fill their gaps. After a divergence, the gap was filled, divergence then fill, and so on, until eventually it became, after this section, it stopped filling the gaps again. Okay, and that's when the risk started to appear. If you look carefully over here, there's a high point of over 18,000, and this section, if you look at the missing points, they happen to fall within the exemption zone. In other words, the points that appear in this exemption zone, it can temporarily leave the gap unfilled, mark it first, and then keep rising, right? As for the ones above, those have to be filled. When the upper gaps start to remain unfilled, then you know that from that point on, it might really be time to sell. So, currently, when observing the DFJ indicator, or rather, from the perspective of the market and the way we observe things right now, this is the approach we can take. So in this area, it's also possible that the gap won't be filled. It might not be filled. You can see that the price movement here is very dense and cluttered. Why did I draw so many trend lines? Because every time it breaks a new high, every time it surpasses a previous high, I have to draw a new trend line. Right? Every time it breaks a new high here, there's a new trend segment. Here, there's a short-term high, so there's also a small trend line. But every time it breaks the starting point of a swing high, a new trend line appears. So you see trend lines appearing very densely like this. Interestingly, in this upward move, when the price rises on the subchart, it shows the same pattern, the same structure. You can see it clearly if you observe with this subchart. You'll notice, wow, what a coincidence. It's the same here too. Starting from this low point and moving upward, you'll find that, so, actually today and yesterday, in the middle of the night, when the night session started, this rebound began and continued all the way up to today. It just kept rising without looking back. Did you notice that this move is actually quite similar to the overall trend we see on the daily K-line chart? Although it's not exactly the same, it's quite similar. Actually, as I've mentioned before, this kind of thing happens quite often. In the movement of a trend, it will also appear on the minute charts, letting you know what kind of situation the current trend is in. So this minute chart also shows a similarly dense upward trend line. Here, because every time it makes a new high, you can draw a trend line, right? You see, every time it breaks a new high, you can draw one. Here, look, it makes another new high. It's very dense, very dense. The trend lines that form are so tight that you'll notice the price just can't break below them. Oh, and it hasn't surged either. It's just moving up steadily along this very dense area, right? It's actually very similar to what we're seeing now on the daily K-line chart, the daily K-line. That one. You have to draw it from below. If we draw it from below, starting from this lowest point in September, and then draw upwards, right? It's the same. It's a structure of a dense trend line. Okay, so for the bulls, this kind of structure actually means the rally isn't over yet. Why? Because it's been moving along this channel the whole time, and it hasn't been overbought either. It also doesn't drop much, and so, since it hasn't been overbought, that's just how it is. The reason it hasn't been overbought is something you can see. If it were going to be overbought, then during a downtrend, it would break through and fall below its original trend structure. For example, look at this structure here. See this structure, right? It would break downward and cut through this entire line, right? In that case, it would create another kind of comparison. For example, if we're talking about an upward move, when it breaks through the upper trend line to push higher, that's an upward movement from a different angle, right? Okay, so after it completes that upward move from a different angle, maybe then a short-term high will appear. But looking at it right now, this kind of rhythm actually, it seems like it hasn't happened yet, not even close. In other words, at this point, I can only say that it's probably still in the stage of building up for a rise. Everyone keeps thinking it should pull back, that it should correct, but it just can't seem to pull back. Even when it should, it just doesn't. And you can see there are some rather unique structures. When it goes up, it looks like a staircase, right? When it looks like a staircase, what do you see? You see two corners. You see two corners. That's the double bottom. This double bottom, at different times, it forms these corners differently. Since August, especially in the past month or two, every time it rises, it forms different corners, horizontal corners. You can see these horizontal corners. All right. Basically, in the past, I used to record a voice message every day. I would go into more detail, maybe explaining exactly where this corner appears, the angle of the trend line, and various aspects to determine whether this corner is the same, whether it's valid. Now I can only explain the result, just explain the result, which is that this kind of corner, in relation to the current trend, belongs to, it's an upward trend for the bulls. Basically it rises from here, and there's a high point here. So basically this is our indicator. At the time I also mentioned there would be a pullback, and there was a pullback, then it went up again. You'll notice that there was already a suppressed angle here, and then you pair it with this. There's another suppressed angle here, and then you pair it with this. This is the second leg, right? So it has a, after it rises, it will pull back and then continue to rise, right? And recently, you'll also notice there's a leg here and another leg here. Last night during the night session, it also formed a leg here. So actually, you'll see that this is also a double bottom. You can see that this is a double bottom, right? It means it has formed two legs. Then, after some consolidation, it pushes upward again. This is why you see the current uptrend moving steadily, step by step, right? When the price moves up too quickly, it will pull back to form a second leg. Similarly, when it rises sharply, it will pull back to form a second leg, right? Now, you might say, hey, this one moved up pretty quickly, but it actually didn't pull back to form a second leg. It could have pulled back deeper, maybe retraced to here and formed a leg, but actually it already formed one over here, so what about this area? Impressively, its leg is actually over here. In fact, within the subtrend, there are also two legs here. After consolidating, it pushed up again, right? Then here, these two legs, and then it launched another wave up. Here's the third leg, getting ready for another upward move. So when you look at this trend, I say it's very steady. It climbs step by step, just like a staircase, moving upward one step at a time. It keeps moving upward, right? Up until now, it's still like this, isn't it? Oh, it's still the same, right? Now, of course, if one day it really does break down, right? Oh, then it's not the same anymore. If it breaks down, there will still be a chance to escape, right? There's still an opportunity to get out, and maybe it will even form a top. Right, right. So maybe even if it's not right anymore, there could still be some time spent at this top. Now, if it continues to move upward, what then? Maybe after consolidating, it could even have another steep upward surge before this rally finally ends, right? So how much further does it have to go? It seems like we can't really estimate that right now, can we? Oh, maybe we can use what I mentioned before. The long-term estimation method, right? Let's try estimating it again. Okay, so this is from your K line, right? And if you look at the 30-minute chart, you can also see it forming a pattern on the minute chart. You can also see it forming an angle on the minute chart. Here it moves upward, and from the starting point, you'll notice, hey, there are 3 legs, right? It goes up, then gets pushed down, goes up again, then gets pushed down again. This leg starts to move upward right here. See, did it go up, then come back to form a second leg, and then move up again, right? Here you'll notice, see, there's one leg here and another leg here, and then it goes up again. Isn't that right? Isn't it the same here? As long as it starts to pull back and consolidate, it always ends with 2 legs. The ending position of these 2 legs is usually back at the trend line, or at the position where the trend line has been extended outward, right? For example, take this one. See, it broke through, then pulled back to form a second leg, and it's still going up and hasn't finished yet, right? It's always the same. In the early session, if it opens high and surges upward but doesn't break through, it gets held back and pulled back again to form, once again, 2 legs, and then continues to push higher, climbing step by step as it rises. This is the support for the uptrend. It means that actually you can see this upward movement is very stable. It always has a lot of invisible support, a lot of support that you can't see, constantly at work, preventing the trend from falling. Step by step, it keeps moving upward like this, right? Alright, so for this, you might need to keep observing it yourself because the market trend is always changing. As for me, I start from the smallest time frame from 1 minute and then look up to the monthly chart. Right? You spend a lot of time every day tracking and observing, and then you see what kind of rhythm the downward side produces, what kind of rhythm the upward side produces, and after they combine with each other, you can then make a judgment. So the conclusion right now is that the market is still in an upward phase because the rhythm of the decline and the rhythm of the rise are different. There's a clear difference between them. When you start to notice this difference, you'll know the direction is upward. Yes, 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 that's how it is. The upward trend can be maintained, but what about the downward trend? It keeps dropping sharply, so the 2 directions are different. This way, when you judge the direction, it becomes very easy to distinguish. Alright, so if we want to predict this long-term trend, as I've mentioned before, this is a 20-year major bottom, right? Basically, if this 20-year bottom is going to rise further, if it goes up, basically it should rise for at least another 20 years. But if we start counting from here, say from 2009, when it broke through, after breaking through and pulling back, there should still be at least 10 years of market movement ahead. So if you look at it from the perspective of the time cycle, right, then as it goes up, you can actually see this upward movement as well. It will have something quite similar, like 2 distinct legs, and then it will eventually break through this particular point. This point is exactly where all of the trendline resistance converges. Because you'll notice that there's a line here, another one here, and another one here. 3 trend lines all converge at this spot. And right at this area of greatest resistance, it just starts to move upward, right? After moving up, it then pulls back again. So what is it actually doing here? It's forming the second leg, right? Laying the foundation for the second leg. When it breaks through, it pulls back to test. And after testing, it continues to rise, right? So this current trend is just like what I mentioned earlier. The movement on the minute chart is actually the same, meaning that after it breaks out, it still pulls back and then continues to rise. What does that mean? This first stage is solid, really solid, and it just keeps going up, right? After it goes up, it pulls back again, and then pulls back once more, and after that, it will continue to rise further, right? So, looking at the distance, the angle is getting steeper and steeper from here to here. The distance from here to here is about 10,000 points. going from a little over 8,000 to 18,000, so that's 10,000 points. Then the distance from here to here is about 12,000 points, a bit longer. When the upward movement starts to enter a strong uptrend, meaning when it's a relatively strong bullish wave, what have I said about its waves? Yes, it's when the pattern of one short and one long becomes very obvious, of course. That's not good, but this is a long-term bottom-up rally. At this point, the upward moves actually tend to get longer and longer. For example, this one here is 12,000, right? The next wave up could very well exceed 10,000, 2,000 points. The distance here is 17,000, right? If you add another 12,000 points, that's 29,000, which is basically 30,000. So basically, if it goes up another 12,000 points, we should be able to see 30,000 first. Judging from the current trend, right now we should be able to see this length, and even this length could become longer. That would be more of a late stage move, and in the later stages the trend tends to stretch out even more, right? It might get even stronger, and that could be another peak, maybe even another bubble wave, but as of now, up to now, there hasn't been any. There really hasn't. That is to say, after it made the breakout here, it actually started rising at this angle. So it's rising at this angle unless it makes an even steeper breakout. Oh, only when the trend line is broken will it move to the next stage. For example, it's the same here. After the breakout, it needs to pull back and retest before it can rise. For instance, if there's a very steep breakout here, it will still pull back first and then rise again if it's going to go up, right? So, based on the current situation as it stands, plus my short-term views that I just mentioned earlier, basically, if it goes up from here, it's very likely that it will rise in a way that really does not involve much of a pause. Why would it rise without much of a pause? Because if you look at the daily K line, it doesn't really pull back, right? From today's short-term structure and the medium-term daily K line structure, plus this common pattern, it's very likely that it will keep moving forward without looking back. Of course, I mentioned earlier that it might move in a step-like pattern, right? So we'll just keep observing to see if it continues to move in steps, or if it starts to start attacking from a steeper angle, right? The earlier it starts attacking at a steep angle, the more we need to pay attention to what happens afterward. Now, looking at this wave on the daily K line, TSMC didn't hit a new high today, but the overall market did. The broader market hit a new high today, right? So what we need to pay attention to next is, hey, why didn't TSMC hit a new high? How long will this situation last? Or maybe TSMC will catch up and hit a new high tomorrow, right? So if TSMC doesn't hit a new high, does that mean it needs to consolidate for a while? Just a temporary consolidation, right? And how will it consolidate? Will it be a strong consolidation, or will it still keep rising? That's something we still need to observe. As for TSMC, basically in this round of gains, it can't be too weak. If it's too weak, how could it possibly? What I mean is, it can't just not look back at all. Right, that could also possibly cause, of course at this point, it's quite reasonable for some individual stocks to catch up in the short term. Why? Looking at the long term, even though the electronics sector may seem, it's just that it's not. This high point, it just hit a new high. Last time it also reached a new high, and this time it just hit a new high. So what about the financial sector? The financial sector hasn't reached a new high yet. It's just a little bit short, right? Oh, it's just a little bit short, which means that electronics and finance is also following along with electronics in this round. But if you look at it from a longer term perspective, you'll notice that as for the financial sector, it's actually still some distance away from this high point. It hasn't surpassed it yet. It has a solid base, but there's still a gap to that high. But if you look at electronics, that high point from 2000 was surpassed a long time ago. It was already broken through in the last rally, right? So, looking at the whole long-term trend, finance has been very strong recently, hasn't it? It has hardly fallen at all, right? So what does that mean? The financial sector also has some momentum building up, aiming to catch up and make up for this high point. This is the overall trend for finance. This is what we're seeing right now. In other words, you can see that the entire financial sector, both the sector as a whole and individual stocks, are showing a pretty strong trend. Of course, the leading stocks seem to be a bit weaker, but you'll notice that many bank stocks have been very strong recently. Many of them are leading the charge, and this is something worth paying attention to. Among the bank stocks throughout this entire cycle, in all aspects, they all possess the strength to continue rising. Of course, next are the traditional industry leaders that are often mentioned. These traditional industry leaders, or some of the ones that have lagged behind, may also start to catch up. However, this catch-up might happen at different speeds, some faster, some slower, so you'll need to observe for yourself. So actually, the current trend is still the same as before. Whether it pulls back or not, right now it looks like it won't pull back. So what if it does? If it does pull back, then in the short term, but at the moment it seems like it doesn't want to pull back. This is a bit different from last week. Last week I said there was still a pretty good chance it would pull back, but it might not. But this week it looks like it doesn't want to pull back, right? But even if it does pull back, the downside is limited. That is to say, even if it pulls back, it would just move back and forth here, forming a top. You still have plenty of opportunities to do things, plenty of chances. To sell, right? There are plenty of opportunities to sell at a high point. That is to say, even if it drops here, it will bounce back up, bounce back and continue to consolidate, continue to form a top. Only then can it possibly reverse direction, right? So even if it pulls back, there's no need to worry too much for now. Besides, each step up has been very solid, hasn't it? If there's a pullback, well, then we can reassess. Should you sell when it rises? If there's no pullback, then it will just keep going up. Based on my earlier estimate, maybe later this year we'll even see 30,000 points. Alright, that's it for today's analysis. Thank you everyone.